This is Kali Persall, editor of Institutional Investing in Infrastructure. Here with me today is Ariana Nelson of Platform Ventures to discuss how cold storage is blurring the lines between real estate and infrastructure much more. So, just to kick off, Ariana, can you just tell me a little bit about yourself and Platform Ventures, what you do there?
Of course. Thanks, Callie, for arranging this talk today. I'm very excited to be here, but I am Platform Ventures head of investor relations. And Platform Ventures is an independent entrepreneurial private investment firm that was launched in 2008 and invests into scalable investment strategies and other special situations through closed and open-ended opportunistic real estate funds. We have this operator-oriented investment platform that is vertically integrated across logistics, housing, and real estate credit. But we're not your typical real estate investment company. We have this unique ability to find and unlock value in non-traditional investments. And I'm excited to be here to talk about one of those, which is cold storage.
Excellent. Thanks so much for being here today again. And so, we're seeing a lot of interest in cold storage on the infrastructure side as well as real estate. Just from your perspective, what factors are driving that growing interest in cold storage within investment portfolios?
Of course. Yeah, I think it's important to first note that cold storage and the cold storage operators in these facilities are the most critical components of the global food infrastructure, connecting supply chains across the world for these key multi-billion dollar food and beverage markets and pharmaceuticals. So just think about your food, whether it's your hams and your turkeys for your holidays or your frozen items in your local grocer, unless you're going directly farm to table, most likely your food is going through a cold storage facility. And I think that's really a critical point to make. And because of this global food supply infrastructure, this asset class has proven to be recession resistant. This asset class continues to have above average revenue growth during the GFC. Compounded annual growth rates of revenue were consistent. And most recently, during the pandemic, as the country was sheltering in place, growth returned to its gradual pace. So it has these long-term demand drivers due to the inelastic demands of food, even during downturns, frozen food affordability, urbanization, a shift towards outsourcing. So if you're eating at a restaurant or you're doing your weekly grocery shopping, the demand for fresh, healthier, frozen foods are where things are shifting towards. And there's less preservatives, less shelf life on all of the stable items that we need. So putting food and beverages in cold storage facilities is becoming more and more critical to the supply chain. And then when you think about the infrastructure, it's still catching up. So there's this lag in terms of the amount of cold storage facilities we have in the United States, the markets that they're located in, and when they were built. So, for example, the average cold storage age is about 40 years old. And with three-quarters of the US capacity being built in the 20th century. So how we measure profitability in cold storage is on the dollars per pallet basis. So how many pallets can we fit into these buildings? So a building built in the 70s, 80s, or 90s have a ceiling height of about 15 to 20 feet. But the newer buildings can get anywhere between 60 to 70 feet of clear height. So that offers tremendous opportunity to add additional pallets into these buildings, in which turn generating more profits and ultimately generating higher margins, better returns, and better cash flows for investors. So this need to update the cold storage infrastructure is a key driver both towards consolidation in the industry and where investors are taking advantage of the opportunity in the space.
We just published an article you wrote in Institutional Investing in Infrastructure, and that kind of echoes some of what we're hearing in terms of our events, things that are coming up. I feel like cold storage has been a topic that has come up more than once in recent times. So, just from your perspective, how does cold storage sort of blur that traditional boundary between real estate and infrastructure?
I think the lines are blurred a bit because the cold storage services are operated within the physical structure of these very specialized buildings. So just like any real estate investment, the physical structure, the strategic location, and the expertise of the operator are what is driving profitability and value. So there are a number of intersections between what infrastructure investors are looking for and what cold storage can provide. So infrastructure investors are looking for things like essential services that are vital to society. So cold storage provides a food infrastructure that is critical to preserving our perishable foods. For pharmaceuticals, many of our vaccines and other temperature controlled medications require precise temperature controls to maintain their quality. Cold storage also enables economic development. So it lets developing economies participate in global markets of perishable goods as both producers and consumers, so fostering economic growth. Infrastructure investors are also looking for stable and predictable cash flows. I already mentioned the inelastic demand of food and cold storage's ability to generate profits even during economic downturns. They're also looking for diversification and lack of correlation to other investments. So I would argue that because of the intense operating components within these buildings, cold storage valuations are not as sensitive to swings in cap rates as other real estate investments, which can bring some portfolio diversification to investors. And infrastructure investors are looking for long asset lifespans. So I touched on the average age of these facilities earlier, but these physical boxes have long lifespans, which can be extended with regular capital investment. And finally, high barriers to entry. So first, these specialized facilities require a significant capital investment to buy and develop. Cold storage facilities are very operational intensive and require specialized expertise. So in order to drive value, it takes a very hands-on approach from operators with a very unique skill set. And today, what we're seeing are investors that have combined both their real estate and infrastructure investment teams, not putting the asset class in either or, but rather the allocation is coming from both real estate and infrastructure.
So, just from an investor's perspective, as a whole, what makes cold storage such a compelling asset to invest in?
Sure. Yeah, there are a number of compelling reasons for investors to make cold storage part of their portfolio. And some of those reasons are often will complement what they already have. So think about, high barriers to entry, which in turn has less competition. So you can't just decide, I want to go build a cold storage facility. They are very high capex, technical complexity, and industry knowledge is needed for these buildings. And this creates a natural environment favoring experienced operators. Investors also look for sticky tenants. So cold storage customers are very loyal to their cold storage provider when good customer service is offered. So, and they'll also expand leasing across other facilities within their cold storage operators network, creating organic growth that investors value. And investors look for demand, which is durable and growing. So just think people always need food, medicine, and vaccines. Think of your online grocer, your food import export, your pharmaceutical growth. All of these things create durable and secular tailwinds. And cold storage offers attractive yields relative to traditional industrial. So cold storage isn't just a bet on refrigeration. Cold storage is a bet on essential infrastructure for how we live, eat, and heal.
Very well said. And I know you probably hear a lot in the industry about cold storage and people's views on it. If you had to point to some common misconceptions that investors have about these assets, what would you say those were, and how do those perceptions sort of differ from the operational reality?
Yeah, we do hear a lot of misconceptions, just in general. One of them we hear a lot is cold storage is just like warehousing, but colder. So that's not even close. It's very capital intensive, technically complex, like I've mentioned, and has a much higher build and maintenance cost. And there are different tenants within these boxes. So if you compare it to dry warehousing, the tenants tend to operate their own space. But in cold storage, over 70% of cold storage users outsource their cold storage needs to an operator. Therefore, the depth of our tenant pool within a cold storage facility is much larger than the single user model. And if you can own and operate your facilities like we do at Vertical Cold Storage, there's an ability to really drive more value than a single tenant triple lease. Another myth we hear is cold storage demand is seasonal. It's actually very stable and growing. And like I've said, think food, farm, or grocery delivery. These are all 365-day needs now. Another myth we hear a lot is you can easily repurpose a dry warehouse to a cold storage facility. And that is not true because they're very highly specialized assets. And to maximize efficiency and profitability, you would want a purpose-built building. It's not simply plug and play. And then another myth we hear is that cold storage is low tech. So modern cold storage runs on automation, it runs on sensors and real-time monitoring. Tech is not optional for these assets, it's critical. And we made a very conscious decision to run on a single tech stack within all of our facilities so that tenants' user face is consistent and easy to manage across their network. And then finally, another myth we hear is that all cold storage is the same, which there's frozen, there's chilled, there's controlled humidity, all with different requirements and operational complexity.
I did not realize there were so many misconceptions about cold storage. Thank you for clearing those up, though. So, cold storage, as I understand it, is often viewed as a specialized or alternative investment. Do you think, given the growth in the segment, that the label still fits, or is it kind of time to rethink how the asset class is categorized?
I think it's time we rethink this label. I know, why is it considered alternative? So historically, cold storage was niche, servicing a narrow band of tenants like food distributors and grocers, and the operators tended to be local market operators and mostly mom and pop groups. And there was limited transaction comps, which kept many institutional investors away. But why I think that's changing now is because of all of these mainstream demand drivers. Like I've said, e-commerce, grocery, meal kit delivery, pharmaceuticals, biotech, they've all brought cold storage into the core of supply chains now. So it's no longer a side play, it's infrastructure critical to daily life. And a lot of the institutional capital is moving in. So large REITs, pension funds, and private equity are actively targeting cold storage in their core plus and even core strategies. Lineage is another great example. So Lineage is the largest cold storage provider in the world. And when they IPO'd last summer, that was the largest REIT IPO ever. So if that isn't a testament on the capital coming into this sector, I don't know what else is. The lines between core logistics and cold storage are definitely blurring. And then finally, data and standardization are catching up. So more deals are getting done and more facilities are coming online. So the market is developing better data and comps, which is reducing the opacity that once kept it labeled as alternative. So the bottom line is that cold storage may have worn this alternative badge in the past, but the fundamentals are now mainstream. And with strong demand, sticky tenants, and macro trends at its back, it definitely deserves a seat right alongside traditional logistics in the investment conversation.